To talk more about the movements in the markets, we have with us Vijay Valecha, CIO at Century Financial. Welcome with us as usual. How do you comment on the movement of the metals this week, specifically the gold? We did not expect that the gold will reach 3,300 US dollars per ounce. Therefore, the expectations of Goldman Sachs to reach 3,500, will it happen very soon?
Absolutely. Gold has had a stellar rally this year. Gold is up almost 27% for just this year alone. It has surpassed last year's earnings on as well for the entire year. We still have almost three-fourths of the year left, and gold could be flying to new colors. We have not seen such a move in gold since the 1970s. And it does look like the rally is not the end of the rally or just the last sprint at the end of the marathon. It does look like a rally which has really good legs. We do expect gold to move even further throughout the year. 3,500 by Goldman Sachs is a conservative estimate. We do expect $3,500 on gold as well. It might be probably within the next 1 or 2 months itself. We do expect gold to even hit $4,000 an ounce by the end of the year.
Mr. Vijay, head of IMF saying that the global trade order is being reshaped, and this of course tests the country's ability to be resilient, and the small and the emerging economies will be the most affected. We expect also the IMF to give their new outlook next week. To what extent do you believe that this is priced in the commodity prices, specifically oil and the metals?
I think most of it has not been priced in yet. We do believe that emerging markets will be the majorly affected economies. At the same time, it cannot be determined as of now whether they'll be completely negatively impacted or positively. Given the tariff situation, there might be opportunities for a lot of emerging countries in the commodities space which can actually work out in their favor in a very, very large manner. There are emerging markets like India and Brazil and other South American nations which actually could be benefiting a lot from these tariffs given the situation that US and China have put themselves in. We might actually see a lot of beneficial countries on the commodities trade. At the same time, the commodities will definitely be impacted much more negatively given that trade will definitely stop or pause at least for the next 90 days.
Vijay, there is also a threat for the global growth, and it will be negatively affected by the tariffs. There is a clear caution from the central banks before continuing cutting the interest rates to have more incentives until they see the impact of tariffs on inflation. So really, do you believe and expect that the demand on energy will enter recession in the coming period?
We have seen energy prices come down drastically this year. We have seen WTI test the 55 level barrier. We have seen Brent test the 60 level barrier. We definitely are seeing a slowdown in demand globally and including China, and that will affect energy prices to a certain extent. We do believe that market has factored in these kind of downsides. A fall of almost 25% on Brent in this year. So that is, I think, factored in already. At the same time, we are seeing a much weaker dollar from what we started 2025 at. That will obviously be a much positive boost for oil and other commodities as well. So while we do see energy prices might not be hitting the 75-80 levels this year, but we do feel that the floor has been established and the weakness on the prices side might not be furthermore.
Vijay Valecha, thank you so much for being with us. It was a pleasure as usual.
Thank you so much.